Now let's start with sales of goods. When you talk of sales, when you hear sales or revenue, as the popular name may be, as far as IFRS is concerned, in the days of those are old people, they usually call it turnover as well, right? But in more recent times, the name used is revenue. That's the income you earn from your core business, your primary business. The reason you set up that company, any income coming from it is called revenue. And it usually arises from you dealing with your customers. Very important. With your customer, anybody that is that falls into the bucket of the customers defined in IFRS 15. So first, we take sales as a line item. Sales. Or before we take sales, let me open up another document where we'll be recording the transactions. Before we take sales, I'll call it accounting system. So now we're about to start the double entry. Please follow me. Follow me so closely that when I look back, my nose will touch your nose. That's how closely I want you to follow me. So when transaction happens, we have established that it will affect an element. When transaction happens, we have established that it will affect the financial statement content. It might be either income statement or balance sheet, as the case may be. I want to add one more. It will affect the notes, note line. Then, as transactions are happening in practice, we post them into what they call general ledger accounts. So what this document is trying to do is to associate every general ledger account with an element, with a note line, and a financial statement content. You will see how that will be helpful for us as we proceed. So we can now go into sales.